Welcome to the Ecommerce Finance Podcast. I'm Stephen Brown with Ledger Gurus. And today on this episode, I have Oliver Blackmore, Director at Elver Ecommerce Accountants, with me to talk about VAT, or Value Added Tax. Oliver, thanks for joining me.
Thanks for having me. Delighted to be here.
Tell me about your journey to e-commerce. How did you and your firm get into e-commerce?
So it was almost by accident, sort of 6 or 7 years ago, really. We realised we had a handful of clients already in the e-commerce space, having originally been just a general practice with no sort of specialism, but quickly recognised there was a need for a specialist in that area. And from there, have really pivoted our focus towards e-commerce in the last 6 years or so.
Earlier this year, with all the tariff madness coming out of the U.S., VAT came up, and I was like, man, we need to do a VAT episode because I don't know a lot about VAT. And to be honest, I have a feeling that most sellers don't really understand VAT, particularly if you're here in the U.S. Here in the U.S., we have sales tax. I can tell you they don't understand that at all. Let's just start with the basic question. What is VAT?
So VAT is a tax that's added at the point of sale. So generally in the UK, EU, most sales will attract VAT. It's somewhat similar to GST, but then generally GST tends to come at the final stage of the sale rather than there being layers of VAT through the flow of goods like there is with VAT.
The sales tax here in the U.S., it's done at the time of sale. It's usually determined at the state level, which creates a lot of nightmares because you have all these jurisdictions and different rates. Exactly. Is VAT a standard rate in the U.K.?
No, we have 3 different rates of VAT here in the U.K. Even on top of that, you can potentially have a blended rate, although that would be quite unusual. So you've got 20%.
It's complicated like it is here.
Yeah, definitely. We don't have the challenge of region by region VAT to deal with. At least it's all consistent throughout the country.
Now, you said something I want to pull a thread on, the layers of VAT. Tell me about the layers of VAT.
So just to draw a comparison to the US, if you're a business in the US buying from another business, as I understand it, you would get a sales tax exemption on that purchase and you wouldn't pay GST on that purchase. The difference in the UK is that business you're buying from would charge you VAT, but then you would be able to reclaim that VAT to offset the VAT you pay on your sales.
Okay, so you can
reclaim
it. Yeah,
and that's where the layers come in. Because if you imagine that supply chain, if it's all UK, there's layers of VAT throughout that supply chain.
Now, you mentioned something, and I do want to get into it, but there's VAT and there's GST. What is GST?
So GST is what you see more in the US, Canada, Australia, and then EU is more VAT. It is VAT focused, but then the fundamentals aren't all that different in that they're both taxes charged on sales. Generally, the biggest difference is around reclaiming of VAT being a possibility versus not so much with GST.
Gotcha. I really want to hone in on selling in the UK in particular, because I'm sure you're an extra expert in that area. And I see a lot of American brands that are like, hey, let's expand our sales. Let's go to the UK. Why should an American e-commerce business care about VAT if they're selling into the UK or internationally?
Okay, so if you're wanting to sell into the UK as an American business, there is no VAT registration threshold. So essentially, you should be registering for VAT in the UK in order to make your first sale. On top of that, you would also need to register for a UK EORI number in order to be able to import into the UK. If you didn't register straight away and didn't have that in place, there's a good chance your goods are going to get held up at customs. So you're going to have customers complaining they're not receiving their products. So it's really best to have everything set up from day one, really, if you're wanting to expand into the UK.
Interesting. You got into my next question, which is, when is VAT triggered? It sounds like for sale. You're immediately on the hook to pay VAT.
So that's the case for any non-UK established business. So for a UK limited company or sole trader, they would have a £90,000 registration threshold. So you can sell within the UK, up to 90k before you need to worry about registering.
Gotcha. That's somewhat similar with what we have here in the US we have the thresholds for registration in the different states. But okay, so let's pull on that thread. I'm an American seller. I've got people in the UK or the EU, but we're going to stay UK focused just for this scenario. And I'm like, let's go sell in there. And I need to get registered before I can do that sale. What is the process of getting registered to, for VAT in the UK?
So it's all done online. So it's an online application process. That being said, when you are an overseas-based business wanting to register for VAT in the UK, it is a more complicated and lengthier process. So about a year ago now, HMRC switched to manually reviewing every VAT registration application that comes in to their office. It used to be the case that a good portion of them would just go straight through and get auto-approved pretty quickly. So that change meant for a period of time it was taking maybe 2 to 3 months just for a UK business alone to get a VAT registration in the UK. That's probably come back down to like a month now. But then for an overseas business, as soon as that registration goes in, our application goes in, it's going to a specialist team within HMRC. HMRC being our equivalent of the tax
IRS here. We have two layers of tax here. We have state tax, which is where sales tax happens, and we have federal tax, the IRS or Internal Revenue Service. HRMC is like your IRS, right?
Yeah, it's sort of all combined into one, really. There's separate departments within that, but yeah, all those two functions within the US are covered by HMRC in the UK. But then for an overseas business, they're going to get referred to this specialist team, and essentially they'll get sent a load of extra forms by email to complete. So HMRC want to know an awful lot more about an overseas established business compared to what they would ask a UK one. It's things like evidencing your intention to trade, verifying your identity. So it is a more onerous process for an overseas business.
And let me just catch that again. How long do you say it's taking to do registration in the UK for an international seller?
For an international seller, I would say on average a couple of months. I have seen it take a year. That would be unusual.
Now, wow, that's a long lead time. One of the things I've seen a lot of the sellers I work with, the way they'll get into the international markets is through Amazon. How does that change? If let's say I'm selling on Amazon, I want to spin up Amazon UK. Do I still need to go through the same process, or is it different?
So selling on Amazon rather than selling direct to consumer does change things in terms of how the VAT is handled. It doesn't negate your requirement to register for VAT from day one. So most sellers looking to expand into the UK via Amazon would be holding stock in FBA, and therefore by just having that physical presence through holding stock in Amazon FBA, you'd need to register for VAT. But the big difference in terms of how your VAT would then be handled once you're registered is that if you're selling through Amazon, they will collect and remit the VAT to HMRC on your behalf. So if you were selling D2C via Shopify or you were a UK established business, Amazon wouldn't be taking your VAT away from you to pay to HMRC. So that's a specific circumstance for anyone that's selling on a UK-based marketplace but established overseas.
Gotcha. Okay, that's very similar here in the US. I think Amazon in a lot of ways is just becoming the tax service for online sales globally, because they do the same thing here in the US.
Yes.
Here we call it the marketplace facilitator rules. All right, so let's go back into getting registered, because this sounds kind of gnarly. Type of information, you mentioned it, but tell me, what type of documentation, what type of records am I going to have to produce to be registered?
Yeah. So a lot of it's around proving your intention to trade in the UK. So things like a contract with the freight forwarder or an invoice from a supplier showing that the goods are going to the UK. That's the kind of thing that HMRC are looking for as part of that process. But they'll also want to know what, if you're selling D2C, what your web address is. They'll want to see your Amazon storefront. So it's certainly a more in-depth
Gotcha.
process.
And here's just a quick question. I think I know what it stands for. What does HRMC stand for? That's an acronym, right?
Yeah, Her Majesty's Revenue and Customs, or His Majesty's, as I should say,
Yeah.
as of a few years ago.
Yeah, you guys had a queen for so long. It's weird. You got to change that.
Yeah,
that
you spend your whole life
acronym, right?
saying Her Majesty's, and now you've got to
Say His
update.
Majesty. Yeah. All right. Let's say you want to be a pirate, and it sounds like the penalty is you could get your goods held at on import. But what are the penalties? Are there other penalties? Let's say somehow you get past British Customs, but you get caught later. What are the penalties for violating VAT?
Yeah, okay. So there's penalties in respect of late filing. There's also penalties in respect of late payment of VAT. And there's also interest for late payment of VAT. So you can essentially be hit three ways over there for not filing or paying VAT returns on time. So you do have a bit of a grace period in terms of paying, as long as you pay within 15 days of the deadline, which is 1 month and 7 days after the end of the quarter that you're filing for. So in the UK, you would typically file quarterly returns. Then if you tip over 30 days late on filing, you're getting a further 3% penalty. And then for the rest of the year, you're essentially getting a 10% pro rata penalty depending on how late you are beyond the 30 days. And then in terms of late filing, you've got a penalty point system, and that gets pretty messy. But the gist of it for most sellers would be that unless you're filing 4 returns late in a row, you shouldn't need to worry about getting a penalty for late filing.
Dealt this before.
Then the big thing to watch for that's probably more scary than HMRC coming for you really is if Amazon get wind that you're not VAT compliant, you will be immediately suspended. And until that's all resolved, you're not going to get back online. And that's the biggest threat.
I should probably know this, but do they check when you're spinning up an international store for VAT compliance before you can launch it, or are you
Yes,
able to get around that?
they ask you for your VAT numbers through an online system. They can validate that those VAT numbers are live and genuine. So there's not really a way to get around that.
So what are some of the biggest mistakes you've seen with international sellers and VAT? Like, it sounds like there's some barriers that prevent you from getting into the marketplace without VAT registration, but what are some of the issues you've seen with international sellers?
Yeah, so a lot of the issues really would be relevant for UK businesses as well. So focusing on Amazon in particular, it's not unheard of to see people being unaware of the marketplace rules in the UK and not realising that Amazon have paid the VAT on their behalf. Equally, and probably actually more common, is the reverse of that. If you were to form a UK limited company to establish your trade in the UK and start selling on Amazon, that seems to be quite a common approach. But the problem there, if you're owning and managing and operating that business from overseas, you're still treated as an overseas business in terms of the VAT rules. So the big risk there is that if you're not getting the marketplace rules applied to you because Amazon haven't picked up that you're an overseas established business, they will be giving you the VAT to pay over to HMRC as though you are a UK business. Then the day they realise that you are not a UK owned and operated business, they're going to be wanting all that VAT back to pay it over to HMRC themselves. But then, of course, you don't have the VAT anymore because you've already paid it over to HMRC. And that's
Let's pull up thread on somebody who wants to spin up so Amazon makes selling in other marketplaces easier. That's the same here in the US. The facilitator rules. If I spun up my own Shopify store, let's say I had a UK store, or I just enable my existing store to sell into the UK, Now I don't get the benefits of a marketplace where they are collecting and remitting the tax. Let's talk a little bit about the collection and remission
Yeah.
process.
Okay.
Here in the U.S., it's all about Avalara. Not all. There's other alternatives, but they're the big dog. They are the tax engine that a lot of sellers use to calculate sales tax. How do people? What are like the tools that people are using in the UK for calculating VAT on their online stores?
So if you're a UK established business that's looking to file your UK VAT return, you would typically look to do that directly from within your accounting software. So Xero and QuickBooks Online in the UK has that functionality baked in, so it would submit the VAT return directly from there. For overseas sellers looking to file their UK VAT returns in the UK, hypothetically, that's a way of doing it as well. But in reality, options like Avalara probably come more into play if you're an overseas-based business wanting to file UK VAT.
Let me ask another basic question. How often do you have to file VAT? Is it monthly, quarterly, annually?
You can do all three. But that being said, the default is quarterly. Monthly is appealing if you are expecting to be in a refund position for VAT. So that's unlikely to be the case for an overseas-based seller. But for a UK business with a chunk of international trade that they don't need to pay UK VAT on and heavy UK costs, could end up in a VAT refund position. And therefore, for cash flow purposes, you want to get those refunds in faster, and you would file monthly rather than quarterly. Annual VAT scheme is an option. Very few businesses would choose to use that in reality. You're essentially paying quarterly throughout the year anyway and doing a true-up at year end. The reality of that is come year end, your books are in a bit of a mess because you've not had the consistency or the routine of needing to file monthly or quarterly VAT returns, and then you're playing catch up on your books to be able to file that year end VAT return.
So do businesses get to choose their filing frequency?
Yeah, exactly. So by default, it would be quarterly. To I suppose, upgrade to monthly, you need to be expecting to be in a refund position, and then again, annually as an option as well. And it's intended to
Interesting.
simplify things, but my experience is it probably causes more headaches and mess come year end rather than actually being useful.
Interesting. Here in the States, one of the things that happens is you are dictated at times that your filing frequency based on sales volume. So if you start selling a large volume of a large revenue volume, a state can say, okay, you're required to file quarterly now. Now you're required to file monthly because they want to make sure they get their money.
Yeah.
So we focused really heavily on the UK. Let's broaden. And tell me how much are you dealing with sellers that are selling in other marketplaces like EU or other places?
The main marketplaces for our UK-based clients are really EU, US, Canada, and Australia, and we'd support them with VAT and GST compliance in all of those regions.
So let's talk a little bit about not just the UK, but let's say you were crazy enough to want to bite the bullet and go to the EU. Mm-hmm. Usually you have to deal with foreign language stuff, but you also have to deal with other VAT. Is VAT in the EU, is it country by country, or is it treated basically as a block?
It can be both.
Both.
So
okay.
you can register in individual countries. You can also register for the one-stop shop scheme, which would be appropriate if you wanted to sell across the EU and hold your stock somewhere in the EU. And then there's also a import one-stop shop scheme where you can sell across the EU under one registration, but then you wouldn't hold your stock in the EU. For that scheme, you would be importing order by order. And there is a €150 order value limit for that import one-stop shop scheme. The reality, though, is that sellers will often end up with a blend of all those options. So it would be quite popular to hold your goods in the Netherlands in particular, because they have quite favorable postponed VAT options. Essentially, you can postpone paying the VAT when you import your goods into the Netherlands. So it's a cash flow benefit. So then if you were to hold your goods in the Netherlands, you're triggering a requirement to register individually in that country by virtue of the fact you've got stock there. And then if you wanted to sell into the rest of the EU and fulfill from the Netherlands, you would register for the one-stop shop scheme and file one additional return in respect of all other EU countries.
Okay, gotcha. Let me broaden it. What I see more commonly is American businesses going to English-speaking countries because you don't have to, change the labels and all that stuff. I don't know about you, but I see a lot of people going, let's go to the UK, let's go to Canada, Australia, New Zealand, right? That's easy.
I think we see a similar pattern for UK sellers, really. Probably the go-to market we're wanting to move beyond the UK would be the US.
Mm-hmm.
And then Canada or Australia fairly equally, really. We do see some sellers wanting to jump straight into the EU, but it's rare to see a business getting the same level of traction with their sales in the EU compared to the US, Australia, or Canada. Just as you say, of the language barrier and all the extra translation work you're going to have to worry about, that kind of thing. It's actually rare to see an EU business, a business expanding into the EU and doing it profitably.
Okay, so let's focus on the English-speaking world. That's where we're going to get into GST. So let's say I'm going to Canada, Australia, or New Zealand. That's part of the Commonwealth, so there's probably more understanding about their tax systems by UK than there are by US. We're kind of inward focused. We don't always think about how things work outside of the US. But
yeah,
if I'm dealing with GST, let's talk about those three marketplaces because they tend to be larger marketplaces for the English-speaking world. What are some of the nuances of GST in Canada, Australia, New Zealand, if I'm an international seller?
So the principles that we've talked about in respect of the UK, EU, and and US, they're not all that different in that you've got registration thresholds to worry about like you would do in the US, and then you've potentially got registration requirements triggered by holding stock in those countries as well.
Is it the same thing where I need to be registered right out the gate to sell into those marketplaces, or are there thresholds that allow me to test the waters first?
Yeah, so if you're not going to hold your stock in those countries, then they all have registration thresholds, and so that makes things a little bit easier to test the water. But generally, if you're wanting to actually hold stock somewhere, that's when you are generally required to register a bit sooner.
Gotcha. What are some of the biggest, what's like one of the biggest horror stories you've ever seen around an international seller and VAT?
If I were to pick one in particular, it would probably be around VAT treatment of Amazon sales. So if you're not using a tool like A2X to analyze your Amazon payouts, it's not uncommon to see sellers accounting for their Amazon cash deposit as being their sale. As a result, they're quite significantly, with the FBA and selling things probably 40% understating their sales, and therefore underpaying VAT on those sales. It's less of an issue now that the marketplaces rules are in place because Amazon are handling that on your behalf. Pre-marketplace rules, that was probably the biggest mess up you'd see sellers making.
And just to clarify that, if somebody is a seller and has made it through this detailed discussion on VAT, you're calculating VAT on the total amount of the sale, and what we get paid out on these marketplaces is after all those fees. And so the past mistake was you'd calculate your VAT on what you received from Amazon, not what was actually paid to Amazon by the seller or by the end customer.
Exactly, yeah.
Another thing, let's say you're a sophisticated seller and you get in there, you start with Amazon and then you branch out and you spin up a Shopify store. You enable your Shopify store. And so now you have two streams of revenue. This is complicated here for us in the US when we support them with sales tax, because they're like, oh, Amazon's, they're doing all the revenue collection, but you're like, yeah, but there's also your own store. And then when you're calculating sales volume, you have to take both markets into consideration. Are there any nuances if somebody is selling both on Amazon as well as a Shopify store that changes the dynamics for VAT?
The main thing to watch for there is that you would be accounting for and paying VAT on your sales to HMRC on any Shopify sales, whereas Amazon would be paying the VAT on your behalf on the Amazon sales. So you do need to be able to keep those sales separate from an accounting perspective to know how much sales you actually need to pay VAT on when you come to filing your VAT return.
With the VAT return, now I was just thinking there might be a mistake that a lot of people make because they do it here in the US. They're like, hey, I'm registered, Amazon's collecting, they're submitting the VAT for me, but they're not submitting the return, right? They're just submitting the taxes, but you are still on the hook to actually file a return.
Exactly.
That says, here's what we've done.
Yes. So you would still be filing a return to report your sales, not paying more VAT on them, but reporting that you've made those sales. It would essentially be zero rated on the VAT return, so no additional VAT due. But then on that VAT return, that's your opportunity to claim back any VAT you've incurred on your costs. Equally, with regards to importing your goods into the UK, if you haven't postponed your VAT, then you would be reclaiming the import VAT you'd incurred at the point of import on your VAT return, so thus triggering actually a VAT refund to you as a result of filing that VAT return. Touching on postponed VAT, that's something really that everyone selling into the UK and bringing goods into the UK in bulk should be looking to do, because it's improving your cash flow position by doing so. If you're paying VAT on import, then waiting to file your VAT return, and you might not get your VAT refund until a month after quarter end. Potentially that VAT is out of your bank for 4 months. If you postpone it, you don't pay at the point of import. You just report that you've postponed that VAT when you come to file your VAT return. It's essentially in and out, has no actual impact on the VAT liability. So you're keeping that VAT in the bank for 4 months by postponing the VAT.
Let me pull on this a little bit further. So this is where we get into the layers that VAT has that a sales tax like we're used to in the US does not. So when I import, I'm on the hook for VAT. Is that correct?
Yeah, so if you're the importer on record, which you typically would be, then you would be responsible for paying the VAT at the point of import. The way to get around that is to ask your freight forwarder or shipping provider to postpone the VAT. All they need from you to be able to do that is your UK VAT number and your UK EORI number.
Gotcha. So best practice would be postpone the VAT and then pay on the sale to the consumer of your product so that your cash flow is, you're not having to go and get those refunds.
Exactly. Yeah, you'd still be expecting probably to get some refunds if you're incurring any costs in the UK. Maybe you're using a 3PL and they're billing you for warehousing. You don't have VAT charged on that service and you're going to want to claim that back regardless. So really most overseas sellers selling into the UK, if they're marketplace only, are probably going to be in a VAT refund position. Then might flip to being a payable position if a significant portion of your sales are not via a marketplace.
So I want to talk about all these refunds. So all the places that an international seller might be paying VAT would be like upon import, the 3PL, and if I'm hearing you right, I could ask for refund on that VAT. Is that correct?
Exactly. Yeah, and you absolutely
Okay.
should be asking for a refund as part of your VAT return filing process.
Well, that sounds like a nightmare. How is all this process typically handled? Obviously, people could work with firms like yourselves. Is there software that makes it easier to do? Or what's the best practice? Like, hey, you need to find a VAT expert
Yeah.
to help you
So
and they'll use the software? Or how does it, what's the best practice in your
really,
recommendation?
if you're going to be incurring a significant volume of costs that you need to track within the UK, actually just setting up a Xero or QuickBooks just for the purpose of getting your UK VAT accurate and complete isn't such a bad idea, really. Just means you've got a place to track all those costs, and then you can get the VAT categorization correct in Xero, and then you're going to get the relevant VAT reclaimed when you come to file your return.
Is there a volume that you see? Because I think a lot of international sellers, they're just trying to grab some extra revenue and they're like, hey, it's all free money. But do you find that at a certain amount of sales, it makes sense to take that strategy of let's set up our own set of accounting books for this country?
Yeah, I suppose really you've just got to weigh up the cost versus benefit of doing that. So if you're being billed £1,000 a month by your EPL for warehousing, and then you miss off one of those invoices on your VAT return, you've lost £200 of VAT reclaim there. That's paid for a Xero subscription for 5 months. So it's not hard to see how it would be worthwhile to have something in place to make sure you're capturing all of those VAT costs.
Gotcha. Let's talk a little bit about where things are in the future. International trade's a mess here in the U.S. because of this tariff regime, and it's just been horrible. Are you seeing similar tariff changes in the U.K. because of what's happening in the U.S., or is it fairly similar right now? You guys aren't really making the chaos that like our country's making.
Yeah, I think we had our chaos in 2021 when we Brexited, yeah, and alongside that, we got rid of the low value consignment relief, which was sort of our rough equivalent of your de minimis threshold.
De minimis, yeah, de minimis
also recently gone.
Dead here.
Yeah.
And is it dead in the UK? That what did you call it? Low consignment relief?
Low value consignment relief. So it's interesting, I think, to draw a comparison between what happened then and what's happening in the US.
Yeah.
Now.
Tell us what it sounds like you guys were a little bit ahead of us in that regard. What did you see was the consequence of that change in the UK for sellers?
Well, the headline was dropshipping is dead.
Yeah.
But the backdrop to that was really that. So the low value consignment relief was actually only a £15 threshold. So very different actually
really
to the US.
Low.
However,
ours was like $800. So you could put a lot of product in on that threshold.
Yeah, but the reality was that people were. If you think about dropshipping landscape, most people are dropshipping from suppliers probably in China.
Mm-hmm.
There was a lot of under-declaration of value of goods going on to slip through under that £15 threshold. So that was one of the main reasons why that threshold was removed, really, to cut out that opportunity to under-declare the value of goods. And really, as a consequence, at the same time, there was a change in the rules around VAT and accounting for VAT at the point of sale. Whereas previously, that a dropshipper could essentially bring goods in under the £15 threshold, not pay VAT on them, not pay VAT on the VAT return either, because the VAT wasn't accounted for in the same way in terms of the point of sale rules. So the two things happening combined sort of knocked dropshipping on its head.
Did that change effectively kill dropshipping for the UK?
I would say so, and really, practically at the same time, the same thing was going on in the EU, and the portion of our clients that are Drop shipping now is practically zero versus a few years ago would have been a significant chunk of our clients.
And personally, I have not been sad to see the changes of that rule here in the U.S. The only thing I don't like is they did it very abruptly. I never like, I like to see businesses have a chance to change. But the thing that we were seeing here in the U.S. was I'm competing against Chinese-based sellers who are able to take advantage of the de minimis rule here. And so it became a competitive disadvantage. The other thing that we would see is these sellers, and we see it from time to time, they try and get around the registration rules because we're a little bit more loose in terms of importing. So these sellers could go in, especially on Amazon, because we have the volume thresholds here for sales tax. So you could be an international seller and selling on Amazon under that volume threshold and not be registered, not paying sales tax, not filing sales tax returns. And so I think long term it makes things a little bit more fair.
Yeah, that makes sense.
In the short term, I just think it's if you had built a drop shipping business here in the U.S. that was based on international drop shipping, obviously domestic drop shipping still is fine here.
Yeah.
But if you're really dependent on international drop shipping, they just rip that Band-Aid right off and pull the rug out from under you.
Yeah, at least in the UK, we had a bit more notice of that coming.
We were supposed to, and then as is the case with our current political administration, they just changed it. It was going to be like, I want to say like a 12-month wind down, and then they're like, no, we're getting rid of it tomorrow. I was like, what? It went from like this wind down period to, nope, Band-Aid's ripped off, we're done. And now we're dealing with the chaos of our Supreme Court is talking about the legality of the tariffs that have been implemented. And, what happens if they say that was not implemented under the Constitution? The chaos that's going to create is going to be incredible. So it's a crazy time to be doing international business. And unfortunately, I think e-commerce is inherently international in one way or the other because you're usually dealing with manufacturers internationally. Well, final thoughts. Somebody was wanting to expand globally with their marketplaces. You've given a lot of really good insights, but give me a summary. What would you recommend they should be considering as they go international?
Yeah, I think the main thing to have at the forefront of your mind is that when you're wanting to expand into any new territory, you want to be stopping and thinking, what are the implications of doing so? Because invariably there are likely to be some registration and filing requirements triggered by that expansion, being mindful of both selling to a new country but also holding inventory in a new country as well. Using those as sort of points to stop and think, do I need to do something as a result of that change in the way I'm selling? Awesome.
That's some sage advice. On that note, if somebody wanted to connect with you, what's the best way to do that?
You can find me on LinkedIn. I'm Oliver Blackmore on LinkedIn. Also, you can find us via our website. So it's Elver Ecommerce Accountants.
Awesome. Thanks for joining me today, Oliver. Hope to have you on again sometime.
Yeah, thank you for having me. It's been a real pleasure.
Today's episode is brought to you by Ledger Gurus, your go-to team for e-commerce accounting. We handle everything from keeping your books in order and tackling sales tax to managing your inventory accounting and even acting as your fractional CFO. Basically, if it's about accounting, we've got it covered so you can focus on growing your business. Head over to ledgergurus.com and see how our team can help you level up your business today. That's LEDGERGURUS.com.